cities are down. Everyone's inside. Social isolation is the norm of the day. And I have with me Dhiraj Mittal. He runs Prime Capital. He's an investment advisor. Dhiraj, welcome to our show.
Thank you, Jayashree.
Dhiraj, today, we have seen the biggest hammering that BSE Sensex got
Mhm.
in a long while, and the realty index also has taken a huge beating. Should investors be worried?
See, if we look at the hammering of the BSC index or the reality index, all of them have been in line. It's not that the reality index has been singled out. The route has been across the indices. That is one.
Right.
Secondly, if we look at all these indices consist of companies, and it is the shareholders of these companies whose wealth has been eroded in this fall. And there are in this two types of shareholders. One is the promoter shareholders and the long-term shareholders, who understand that the equities create good wealth over a longer period of time. The other is the short-term traders who come into these companies for a shorter period of time. Of course, it is the short-term trader who should certainly be worried. But as far as long-term traders are concerned, or people who understand equities, have conviction in equities, it's a lifetime opportunity to buy. One rarely gets this opportunity. If you look at this fall, and in the it is this fall is there across the globe. In the US also, they are saying it is the worst fall in 100 years. So you can imagine the type of opportunity it has. But this opportunity can be encashed only by those people who have conviction in equities. Rest others would rather be looking for cover.
So, Neeraj, people who have already, in their portfolio, they are realty index is part of it.
Hmm.
Explain to them what happens when the share value gets eroded, right, like this. How badly is the company impacted?
See, as far as company performance is concerned and the share price are concerned, both two are very different aspects. Let's take, for example, in the current lockdown. Most of the companies have announced a lockdown for 15 days. They may extend for a month or 2 months. What may happen? A quarter may go bad, a two quarter may go bad. But when we look at what shares represent ownership of businesses which are going to be there for decades, and they would be earning quarter after quarter. So if a company is going to be there for 40, 50, 100 years, and if it doesn't earn in a few quarters, that doesn't mean you can reduce its value by 50%. This
Right.
is absolutely illogical selling, and it's only a matter of days before it's over. It has happened at least 10 times in the last 40 years, and it is all due to the illiteracy of the investors and the greed and fear. If they realize that the equities represent profit making businesses and their ownership is to be held irrespective of the market price.
Mhm.
See, the market price is based on perception.
Right.
And if we look at all the sell-off that has taken place now or any time in the past, none of these times the promoter ever exits. And end of the day, who comes out the richest? It is the promoters. If you look at the richest people in India, who they are the promoters of these companies. And they never panic. They rather use this opportunity to buy. There was a news item few days back, the Tata Group is buying. The CEO of Tata Group is buying personally all these equities in correction. So if some investors are in a hurry to throw their family jewels for pennies, so smart investors should go ahead and buy.
So, your advice to people right now is when the index is down, if you are interested in real estate stocks, buy now.
Yes, certainly, certainly. Investment now in real estate or any well-managed businesses will give phenomenal return over a short period of 2, 3 years. And that is the time one can book out and go back to real estate. I don't think this carnage will have any or much effect on the prices of physical real estate.
Okay. If anybody has to buy, how do you check the fundamentals of a company?
See, when you invest in equities, the simplest way is to study the balance sheet and the business, have a conviction in the management and invest. But
Okay.
that's easier said than done. Most of the investors do not have that ability.
Mhm.
So better leave that to the fund managers. Invest through a mutual fund route. There will be a professional fund manager who will be picking companies for you. And the diversification that the fund offers will keep you safe.
Um, suppose I decide to buy into. I believe in real estate funds. Suppose,
Mhm.
and I want to buy. Want that my portfolio should have some real estate stocks. When I
Mhm.
pick up a fund, do I have to tell the fund manager that I need some of real estate in it? How does it
See,
work?
see, all the fund managers do not give you a choice to dictate what is to be there in the portfolio. They will have all such companies which are expected to grow at a superior pace, at a better pace than the average. If they expect real estate to do better than the average, then they will have more of real estate. But it may so happen they may be underweight on the real estate if they are not very optimistic about the future of the company.
Right.
As an investor who wants to make money over a period of time, you should not be bothered with what stock a fund manager is buying. You should be more looking at how he has fared in the past, and based on that take a decision. Let the fund manager, he is like a doctor or a surgeon in medical terms, let him take a call on what to buy, what not to buy. If you specifically want to buy any particular stock, then you have to go in direct equity and buy yourself.
Right. And how long should if I've heavily invested into funds, into stocks, and so on? How
Mhm.
long before I can actually see the markets rising?
See, if we look at equities, any rupee that one puts in equity, that typically has a 5 to 7 year discipline, as we all know. Also, there is another rule that any money in equity, when you need to take out, you should do it at least 2 3 years before the due date.
Right.
So anybody who's doing investment by the book would certainly not be holding such equity exposure which they need the next month or the next week or the next year. And if you have 2 3 year horizon, then I don't find that this correction will take so much time. To my mind, it's only a matter of weeks, not more than that. Of course, market may take a year or 2 years to reach its previous highs, but to reach a normal level, it's a matter of few weeks to few months.
Okay. Despite the fact that we don't know how long this virus lockdown will happen, it entirely depends on how the virus travels, right? Or
See,
how we.
it entirely depends on how the virus travels. But if you look at the past, like for example, China was the first one to be affected. Now they have lifted much of the lockdowns. So this virus has, as we understand from the news item, they have a bell curve. They rise and they fall. And based on that, it is expected that by the month of May, things should be normal. And if they are not normal, of course, that exceptional risk always remains. Then we'll see as it comes.
Yeah. So there you are. That's what Dheeraj is advising. Don't panic. Good time to buy. Hold on to your stocks. Let the fund managers take a call if you don't know how to choose your cherry pick your stocks. If you are really interested in real estate stocks, this is a great time to buy because there is the stock value is down, and this is you'll get more stocks for whatever you're investing. And thank you, Dheeraj, for joining us. And that's it, consumers. This is a time not to panic, to keep a level head and see where you want to invest. Thank you so
Thank,
much for joining the
thank
Property Show.
you.
Thank you.